Good afternoon, ladies and gentlemen. Sami Said again, here for you for today's daily recap. In Red Dog's absence, obviously, as you folks may know. Well, just to get right into it, crude oil ruled the day again after yesterday's API report of a surprise decrease in U.S. inventories. We got a report today released at about 11 a.m., which basically dictated all of the trading in both oil and in equities as well, especially in the energy sector. Yesterday, after the report came out from the API saying they were making a cut in crude inventories, the price of oil went up to $34.21. However, after today's report, where we just learned that $2.15 billion of oil was produced, as opposed to the expected 2.86, it seemed to us that a little bit of a build was already priced into oil. So oil, anything in that sector, basically slid about 0.7%. Anyway, on top of that, since crude oil finished down, about 1% here, as we mentioned earlier this morning, we were going to see some correlation in stocks. The XLE, which is one of the charts we'll be going to right now, the energy sector. Obviously, that's one of the sectors that took a hit today. It slid down almost 1%. On top of that, of course, OIH, the market vectors oil service ET, dropped 0.7%. Here in the U.S., though, the S&P 500 futures, obviously, they were up big earlier this morning. However, the positivity in that did not last as stocks dropped in a fairly tight range. Following the tiny bounce at the open up to 1930, the S&P index traded down to 1915.40 before bouncing a bit to finish at 1959. Intraday, the aforementioned weakness in crude oil killed traders' risk appetites, and the action shifted back towards U.S. Treasury and bonds, as well as gold, as indicated here from TLT. TLT had a nice move today, obviously, as the money's rotating back towards safety. As well as one of the gold miners that we had mentioned earlier this morning and yesterday, GDX. GDX had another huge day, up 5.6%. So as we mentioned again, anytime the oil and equities are correlating with each other, a lot of safety is going to flow into some of the metals here. Also, as we mentioned earlier this morning, the FANG stocks, Facebook, had a little bit of weakness today. As you can see by the chart, obviously, Amazon, all the FANG stocks, anything in high beta, anything in tech basically had a rough day today. There was regional weakness in banks, biotechnologies, again, high beta tech stocks. Of course, FANG being some of the culprits here. We can go over to Walmart as well. Walmart, again, reported poor earnings yesterday. They guided lower, and that basically dragged down the entire sector here in retail. Let's take a look at RTH. RTH, again, fell about 0.7%. As we mentioned earlier, there might be some sector sympathy with the poor report here from Walmart, and of course, we saw that today. In any event, the big news tomorrow will basically be the CPI report. That'll basically be the influence for any trader's perception in regards to whether or not the Fed is going to either keep rates the same. A lot of traders actually expect a cut here, but we'll find out a little bit more with the Fed minutes tomorrow. And of course, over the past month, a lot of traders have not really been convinced with any sort of rally. We saw that. It was indicative today with the kind of trading that went back and forth. Of course, the SPY did gap up. It did come in a little bit and a lot of sideways action. So stay tactical, as the Red Dog would say. Be careful out there. And folks, we'll see you in the morning for the morning call. Thanks.